European stocks fell for a second day as Italy's political crisis rumbled on, raising concerns another election could be seen as a referendum on the euro. Italy's main stock index ended the session down 2.65% after earlier sinking to a 10-month low. Italy's bond market also suffered a steep sell-off.The yield on 10-year debt hit 133%, a level not seen since 2014, although it recovered slightly to 2.9% towards the end of the trading day. A rise in bond yields means the Italian government is paying more interest on its debt. Bank shares were also down, slumping by almost 5% to a 13-month low, bruised by a sell-off in Italian government bonds, a significant part of the bank's portfolios. Intesa Sanpaolo, BPER Banca, Unicredit and UBI Banca fell sharply, down by 4% to 5.6%, while Poste Italiane also tumbled 4.5%. Italy's central bank warned the country was only steps away from losing investors' confidence. "We must never forget that we are only ever a few short steps away from the very serious risk of losing the irreplaceable asset of trust," Ignazio Visco, the governor of the Bank of Italy, said. Italy has been without a government since inconclusive elections on 4 March, at which voters flocked to anti-establishment and far-right parties the Five Star Movement and League Nord to lead a hung parliament. Carlo Cottarelli, a former International Monetary Fund official, has accepted a mandate to form a technocratic and politically neutral government but has admitted Italians could face a snap poll if he does not win parliamentary support for his interim administration. Investors fear there is a risk of the eurozone breaking up as fresh elections might give the two populist parties a more Eurosceptic mandate. Renewed concerns caused the Frankfurt-based Sentix research group's Eurozone Breakup Index to climb to its highest level since April 2017, when investors feared a Eurosceptic Le Pen presidency in France. On Wall Street, the Dow Jones Industrial Average closed 1.58% lower on concerns about Italy and a warning from investment bank JP Morgan that markets revenue would be flat in the second quarter. The FTSE 100 closed down 1.26%, wiping £25 billion from stocks.RBS, and Barclays were among the biggest fallers with shares tumbling more than 3%. The stress in Italy also spread to other eurozone markets, with Portuguese stocks sliding by 2.6%. In Spain, which is in the throes of its own political crisis as Prime Minister Mariano Rajoy faces a no-confidence vote later this week, stocks closed down 2.4%. Banco Santander, the eurozone's biggest bank by market capitalization, fell by 5% and BBVA by 4%. The pan-European stock 600 fell by 1.37%, with banks the worst performing, while the eurozone's banks index tumbled by 4.3% and was on track for its biggest monthly drop since the Brexit vote in June 2016.